All right, welcome to today's episode of Tomorrow's Leader, where we dive deep on all things leader related to leading yourself and leading others. I'm John Laurito, your host today, with a great guest, a longtime friend of mine, Scott Shaw, who he and I got the opportunity to work together years ago. Scott, what has it been now? 20
years.
20 years. Wow. Well, welcome to the show, man. Thanks for joining me.
John, it's a pleasure to be here today. Thanks for having me.
Yeah, I know you and I caught up recently and reconnected and, talked about a whole lot of stuff. And I'm really happy to have you on as a guest because I know there's a lot that you can share with the audience. And we got people in all different walks of life that listen to this podcast, from new leaders to leaders of organizations and CEOs to people that just want to lead their life better. And one of the things you and I were talking about, you've really navigated your career path very well. And a big part of that was really figuring out what path made the most sense for you. I know when we started working together back in 2000 or whatever that was, you came in as an advisor, a financial advisor. And then I remember quickly seeing, wow, this guy's got a lot of leadership potential, and started you on a path on that direction. But why don't you just share a little bit about kind of what the path looked like and how you figured out what the right step for you was? I think that'd be great for the audience to hear.
Yeah, thanks, John. It's been about 20 years. Back in 2001, really launched my career under your guidance as not only my first manager, but probably my most impactful one on my career as I look back, which I'm sure we'll get into so many things today. But really what launched me into management was yourself and seeing your styles and how you worked with advisors. And I went down that path and became a coach, began working with advisors and sitting in meetings and guiding them and trying to help lead and mold their future careers. And even as a young adult myself, I still needed so much mentorship from you. Being able to dive into that type of a practice where I was working with my clients, but also working with advisors, it taught me a lot about myself. It taught me a lot about the type of leader that I would become and that I am today. Somebody that likes to lead by example. I do like to get my hands dirty, and I like to work, and I like to get into case analysis and work with advisors, but I am much more of that doer. And I really discovered early on in coaching that sitting there with advisors next to me while being fun and being a teacher was not going to be my end platform, which was really to be working with advisors. And I decided quickly to focus on my practice, focus on developing a client service model that clients would look at and enjoy their experience, and they would see value in my practice. And then really, as we spoke a little earlier about my fork in the road came, like many advisors, in the Great Recession of 2008. But that
yeah.
I mean, talk about a time period that squashed many of my peers. I mean, it took a lot of people out of the industry. So for me, that was the fork in the road. I told you briefly about a story if you want me to go into it here.
Let me ask you a question though. When you, and I'm a big believer that there's sometimes things that happen in life that are out of your control. 2008 certainly was bigger than all of us and out of our control and influence with the markets and the economy. But there's sometimes where things happen that put a fork in the road for you, that actually make you really think about, okay, am I on the right path, or do I need to change paths or do something different? Is that what you felt like 2007, 2008 was for you?
Yeah, it's exactly right. That was my fork in the road of figuring out long-term, what am I doing? What's my strengths? What's my weaknesses? And where am I going to thrive in financial services? The irony is I was sitting in synagogue in high holiday services, and it was Rosh Hashanah of 2008. And I took my phone out of my pocket and checked what the Dow Jones was doing and saw it closing down 700 points. And at the time, that was a large drop. Clearly, my mother did not like me doing that in synagogue, and I got the wrath. But at the same time, I recognized the feeling that I have is a lack of control. The feeling that I have is not what I perceived my clients to want me to have at that time. And I didn't feel like a money manager. I felt like I manage relationships and I do financial planning. And that is a large part of the game, but it wasn't what really got me motivated to get out of bed every day and go to work. And I decided at that moment to go down a different path in financial services and to become a CFA charter holder. To begin that curriculum was something that took a lot of discussions back and forth with family, knowing that it would be a path that would not be easy and not be short. It would take years and a strong commitment. I would have to,
So, and I want to talk about that because I have immense respect for you and anybody has a CFA designation because it is, I think, one of, if not the hardest designations to get. So I want to talk about that with you. But it sounds like what I hear you saying is it was almost like this light bulb of anxiety over the fact that you didn't have control or you didn't necessarily have the clarity on why things were happening and almost felt like you were in the and I don't want to put words in your mouth. Did you feel like you're almost in the passenger seat of the car with managing money versus wanting to be more in the driver's seat of being able to make decisions based on knowledge that you gained yourself? Am I summarizing that right?
I think you're summarizing it accurately. And I think I'll always feel like I'm scratching the surface of the markets and really equity analysis of what I do. But yeah, you're right. That feeling was there of sitting in the passenger seat along with my clients. A lot less in control, a lot less navigating the ship. And that had to change, especially if I wanted to bring my practice to levels that I felt it should get to.
So you began the journey to get the CFA designation. So share with everybody what that is and what is the process, because I know it's an unbelievably rigorous test and process of many years. Tell the audience what that's all about.
Yeah, well, it certainly makes a root canal enjoyable. I can tell you that. There's no doubt that when you embark upon the CFA curriculum, you are really setting yourself up for what is the most challenging curriculum in finance that will take your education to a level that you didn't think that you can get to. Many times along the way, I had strong doubts as to whether or not I would complete it. I guess each level I had that doubt from level 1, 2, and 3 as to whether or not this was going to happen. But yeah, after spending close to 6 to 9 months every single year committed to studying every day, in 2015, I was able to finish it. But this was one that would, to me, every level gained more and more confidence in what I do. And I often got the question of, why are you doing this? I got that from peers, from leaders, from family, and from friends of, why are you doing this? Why are you putting yourself through this 7 days a week? You're up in the middle of the night studying, you work and then study, and that's it. And it was something that I wanted in my life that was a huge goal for me, of being able to attain that designation, knowing that that was the pinnacle of what I perceived to be in asset management. And it was my personal goal. And I simply had the attitude of, I want to finish this.
So, and they give the exam once a year. And if you fail it or miss it for some reason, you literally have to wait another year.
Yeah, I think now it's a little with COVID, they changed a couple things, and now the computer-based system. I think that level one and maybe one of the other two levels are also on the computer.
Mhm.
But yeah, sitting in Philadelphia Convention Center with in level one a few hundred students, level two a table, level three had like 5 people. It
Wow.
was it was very it's very interesting, and I'm exaggerating the point, of course, because that
Yeah.
anxiety of when you sit there,
Yeah.
that gets a lot of people. You have to have a very strong mental game,
Mhm.
and you have to be very prepared. It's certainly
What
not a curriculum to go unprepared into.
do you know what percentage of people actually complete the program?
Uh, uh, so this time around, I believe, well, let's see, maybe in the low teens complete all three. Certainly first time test takers for level one, I believe it's close to a 40% pass rate, maybe a 35% pass rate on level two. And then I believe it was in the 20s for level three. So the cumulative math would
Wow.
mean that, yeah, it's probably in the low teens of people, or the high single digits of people that make it all the way through.
So how did that feel? And do you find out right away that you passed, or do you get a letter afterwards, or?
No, they make you walk home crying, thinking you failed. That feeling for me every time walking home from the convention center. And by the way, that was like a 10-minute walk home. It'd take me like 3 hours to get home. Like I would walk throughout the entire city, going through every single question in my head and trying to think of what went well, what didn't go well. And I always just came to the same conclusion of time to go back to work,
Mhm.
go service your clients. And in a month and a half, you're going to find out if you're studying for another 9 months.
Wow. And what do? You get a letter, or you get an email, or
You
how does
get,
it?
yeah, you got an email, and the second that email hit your inbox, like, oof,
Wow.
yeah, that's it's stressful. And
So what did that
all the
feel like
candidates,
when you found out you passed the final level and you now had completed it? What did that? Do you remember that moment pretty vividly?
I remember it like the back of my hand. For the first time for any of the exams, I went home. I couldn't tolerate the anxiety. I went home and waited, and was like literally like right outside my house, and got the email and went inside, and was with my wife and my daughter, she had been born. She was almost 2 years old at the time. So it was a very, very, very rewarding moment to share with my family,
Oh
and
wow,
they
that's
they went
perfect.
through it
Yeah.
equally with me.
Wow, that's got to
Yeah,
be emotional. I mean, wow, after all that hard work, and well, I mean, congratulations, and that's a perfect way to find out with your family, because they're obviously, it takes a lot of support from them to make it through that, I'm sure.
sure.
It's
Good.
kind of like the Navy SEALs of the financial industry designations.
Except for the fact that they could do a lot of damage to my body with just their pinky. So, other than that,
Well, I wouldn't want to mess with a Navy SEAL. I wouldn't want to mess with the CFA. Maybe a Navy SEAL who is a CFA. That would be a
yeah,
dangerous combo. So,
yeah, we'll whip our
um,
calculators out.
yeah. But I will say, so the interesting thing with you is it sounds like you came to this conclusion, and I see this in all different industries. There's a difference between sharing information that you obtain from outside other sources, and a whole different level, or a difference of being a thought leader, where you're truly the one that's studying things and digging in and coming up with your own conclusions and sharing those. And that's what a thought leader is. It doesn't matter what industry it is, my industry, your industry, any industry. And it's not, you made that transition, which most people don't. It's interesting because it's very hard. It's not like, okay, I'm going to be a thought leader and let me just now embark on the Thought Leader 101 program. It doesn't work that way. What is that done? When you now you have that designation, what it was involved, and tell us about that whole transition of now being equipped to be able to come to your own conclusions about stuff, and how that's changed your business and how you've impacted other people.
Yeah, that's so important, and very specific. The investment policy statement, as a thought leader and going through the CFA curriculum, I really believed that adopting the investment policy statement of working with clients was important in our world, where so many of my clients for at the time over 15 years had never even heard of what an investment policy statement or an IPS is, or how useful it is, or the tool itself. And the reality behind it is now, when at Bash Capital, what we do is bring the analyst, myself, and the financial planner to the table. So when we're working on a investment policy statement and we're talking about risk, we're talking about it from different perspectives, emotions and behaviors, where we certainly ask the common questions of how would you feel, but also the quantitative aspect of a client's ability to take on risk. Well, and a client's ability, that's a quantitative answer that's based off of an analysis having nothing to do with behaviors, emotions, or cognitive biases. And that's where I'll bring to the table an analysis for the client that is based off of their ability as well as a willingness. Now, what we try and do is educate. We like to jump up to the whiteboard and with our clients educate so that there is a clean correlation between a client's ability and willingness. You can imagine the difficulty working with a client if they have a extremely high ability to take risk from a quant perspective, but are the willingness to buy anything more risky than a CD isn't there. That's difficult. We want to really help educate, and vice versa as well.
Mm-hmm. It's interesting because people, they get influenced by the potential for rewards and gain, but don't necessarily understand risks that are involved in getting that or potentially getting that. Sure. That's interesting. So a lot of what you do is dealing and helping people understand emotions, and as well as not just the financial or data related info that's backing up a decision, but emotions are a major part of every decision, as well as financial decisions too.
Yeah. Emotions, I find clients make more emotional and behavioral decisions, less so than the financial ones, the ones that make economic sense. And we like to bring that out and put it on the table. And everyone says to us how their house is worth more than their neighbors. It's the exact same home. Mm-hmm. And their house is worth more because they did X, Y, Z. Mm-hmm. Or I bought a stock, I bought Alphabet at XYZ, so I want to sell it at that price. So we anchor to that. We want to call clients out for it in a very common way and friendly way, so that we can understand and learn from it.
Yeah, it's interesting. There's been a lot of studies about that. People feel that there's a natural bias. If they own something and it's theirs, it's worth more. It doesn't matter if it's an idea, if it's a stock, if it's a house. It doesn't matter what it is. If it's theirs, there's a natural tendency for us to value it as being higher, versus if we were going to buy it from somebody else, same item, but we'd naturally value it less.
And what's so funny about that is it's similar to now in this market today. We're sitting here on August 24th, and markets have been a little bit more volatile over the last couple of weeks here as seasonality has picked up. I get recency bias of clients. The feelings come right back of, oh my God, is the market going to drop again? Are we going to have another fall off cliff? Because very recently it did. Yeah. A year and a half ago. So that I tend to look at those sensitive feelings, and I remind clients that you don't get a bull market that pops when all the investors are skeptical or pessimistic. You usually see those bull markets die on euphoria, as John Templeton said best. Yeah. And we're certainly not at that point now, but I see that recency bias coming into today's markets.
It's like somebody going to a casino and playing roulette, and they're betting on red or black, and they see that the last 9 spins of the wheel have been black. So there's some people that think, okay, well then the next one's going to be black, or it's on a some kind of run, or they might think the other way. Well, okay, because of those 9, then it's going to be red. In reality, it has no impact whatsoever. The
nothing to do with anything.
Statistical odds are still the same.
Exactly.
But it is interesting, understanding people's biases and how it influences decisions. And those are great ones. Are there other biases that you see that you are working to help clients understand and
Yeah.
avoid?
I mean, we go through when clients represent things that are really not there, representativeness bias. We also see like a home bias of clients that have a fear of investing overseas on the international market. So they stay domestic right now, which has certainly protected them. But when we look longer term, diversification within asset allocation will help clients in terms of reducing their risk. So we do try and identify, but to me, the biggest ones I see are recency, the anchoring bias, and endowment bias, where people do believe, as you said, the assets that they own are worth more than the assets that they don't own. And that I do see every single day. So we try and remind clients of that. I'm very agnostic to short-term market moves, as clients know.
Mm-hmm.
And each month they hear from me in terms of what I believe is occurring in the markets as well as the economy, give them a quick update, and more or less try and let them know, hey, here's what you're going to probably see happen as seasonality ticks up in August and September. That volatility occurs. It kind of gives them that recency of, hey, I just read that. Mm-hmm. They're aware of it. They're on top of it. And I could call them anytime if I have another question.
So how do you deal with people that may not know? Because I think, and not just with financial decisions, but with all decisions that do have biases, which most, if not all of us have to some degree. Mm-hmm. But may not realize it. How do you help somebody become more self-aware? And you're speaking to a wide audience here of people in all different walks of life. How can they be more self-aware and maybe pick up on the fact that, hey, you know what? This makes sense. I do have a bias. And maybe I need to be, more cautious.
Start right with the heuristics of what you've done in history. Go right to the statements. For me, in my world, I look at what clients have owned in the past. And usually there's a story behind it. Oftentimes it's not because the investment was trading at an attractive valuation. It's because of a reason. So for years, I saw shares of Cisco in clients' portfolios, or stocks that some of us would remember from the dot-com crisis that were held because clients were anchoring to where they purchased it at. And had they just sold off investments that were no longer working and reallocated, they probably would have recovered. I witnessed that very often early in my career of holdings that were constantly in every portfolio. And frankly, I guess we could all say that we saw that in the real estate market too, because the first 8 years of my career, every real estate investor would often say to me, Scott, why would I ever invest with you on the equity markets? You can never lose money in real estate. So why would I ever do that?
Yeah. It's so funny. You bring back memories. I remember I started my career in 94, and the markets 95, 6, 7, 8, 9 literally shot straight up. And it was 20, 25, 30% returns at some points. And I remember expectations being so off, where people would come in and say, listen, unless you can guarantee me 40%, I'm not going to work. Why would I work with you? I mean, it was that almost absurd. And it was built by the recency bias of what had happened. It's like, well, of course it's going to continue to happen. It's happened. It's been happening. But those
euphoric beliefs, though, that you could probably point to other points in your career also with real estate, of how people may have had a single parent with one income, 2 children, able to get a mortgage, and then 2 investment properties.
Yeah.
Without putting documentation down.
Right.
Like there's just, there's anecdotal evidence of irrational behavior that in hindsight, if you look back, you would say, oh, I would have done things a little bit different.
Well, what I hear you saying, which is great, is, bottom line is there's patterns in people's behaviors. And if you look back, for that person who might be saying, well, how do I make better decisions, whether it's financial or life or relationship or job or whatever, looking back at the decisions you've made and how you've made them. We used to ask that question, what was your best investment? How did you make the decision? Or your worst investment? What factors did you look at? And you'd see that most people stick to the same kind of premise of how they make decisions financially as how they make decisions in relationships and everything. It's not that dissimilar in terms of the biases that they may have.
Very true.
Yeah.
Very true.
That's excellent. Well, I know you mentioned, and I thought that was really interesting, that you've got and I think you called it your daily 7 or your 7 habits. And I love that in terms of how you kind of run your day. Can you share a little bit about that?
Well, of course you love it, because in 2001, you were the one that would make sure that that was ingrained in my everyday, so that I became a systems-based person. And I'm a systems-based person, and I execute that way. So everything in my day-to-day is developed where there's a system, there is an operating procedure for doing it. And if I don't have one, I will get very anxious and stressed over that. But I generate leads every single day. When I was starting my career, I knew that that was my core number one activity that had to be done: generate leads. I had to schedule initial appointments. Scheduling an initial appointment in 2001 and 2002 is a lot different than it is today, especially when you were nice enough to give me a lot of big leads that may or may not have been called dozens and dozens and dozens of times. So scheduling initial appointments was very important. Holding appointments was critical, meaning the people that you were scheduling appointments with were actually showing up. That was a pretty big conversion ratio that we looked at. Servicing my clients, I didn't have many clients in the beginning to service. So every client I got, I made sure that this was top notch. Everything was done right away, on time. You literally couldn't mess up if you only had 3 clients. So that was critical for me. I also believed in following up with contacts, and you had a specific terminology for what is a contact, because that's very general and broad. It was somebody that I was able to keep on the phone for 2 minutes and have a conversation with me. I was then expected to set an appointment with that person. That was setting the right expectation for myself, as maybe unrealistic as it may have been. Following up with contacts was critical. One of my biggest ones was self-development goals. Every single day, I set aside time to do self-development. And I began right away with the CFP. I understood that if you're going to provide advice, strategic advice and planning, the CFP curriculum, that being a fiduciary, providing advice along those guidelines, and with the standards of practice that the CFP promotes, to me, that is where every client should begin. And that's where every advisor should strive to be at. That was important in self-development, along with really this wanting to teach, wanting to be a chalk talk teacher and get really good at that, because I learned from the best. So I wanted to make sure to also become the best at teaching the different strategies that we were implementing day to day with clients. Those 7 habits, to me, that was ingrained. That was every day. If I did those 7 key activities, I knew I was going to bring on 1 client every single week. I knew that right away. I knew if I did 1,400 dials, I was going to get 40 contacts. I was going to set 12, 4 were going to show what was going to become a client. That was my number, and I would memorize it like my birth date.
Well, the great thing about that is, and I obviously you know me well enough to know that I operate my life that same way. And the good thing is, most people don't realize the power of being able to focus on what you can control, which is the activity. Most people get so bogged down with the results of their life or their business or finances or whatever. And in reality, the result is a function of what you're doing and your actions and your habits and your patterns. And when you break it down and say, hey, let me just focus on those actions and behaviors and patterns and define what a successful day is. That's the other thing too. Many people don't know, how do they win the day? And coming up with the concept of, okay, here's what I want to achieve every day. It doesn't matter if it's 1 thing, 2 things, or 7 things. These are the must-dos that no matter what, I will make sure that I do and accomplish. And it's such a confidence builder, because when you do that and you get in the habit of doing that, and maybe it's starting with 1 and then moving to 2 and then moving to 3, but when you get in the habit of that, it just builds this feeling that you can, if you do 1, you can do 2, and you can do 2, you can do 3, this feeling like of growth and accomplishment that feeds that confidence that you have. So it's a great way to live life. And obviously you've had tremendous success, not just yourself, but with your company and also with your clients too. So it shows it works. Yeah. Well, this has been fantastic, my friend. I know we're at the end of our time here. As far as people, a couple of questions I'm going to ask you in a minute, because people that want to get in touch with you, how to do that. But in terms of maybe parting words of wisdom, you've got a lot of leaders, a lot of people that are kind of maybe in that point where they're in a fork in the road and they're trying to figure out what's the right path, or what do I need to do to make sure that I'm reaching my potential and happy and fulfilled. What parting words of wisdom might you give to them that can help them kind of take a step in the right direction?
That's great. Well, I would say that one of my mentors and one of the smartest people I know who helped raise me said, you need to love what you do. When you show up to work every day, you should be happy. You should love what you do. And that will really help in terms of you're striving for the highest level within your career, if it's financial services or something else. But if you're not happy with what you're doing and you're looking elsewhere, that to me, that takes a lot of guts. That's something that I deeply admire, people that recognize, you know what, I'm just not happy here. And I'm going to get up and I'm going to probably do something else. And I respect that a lot. So for me, my advice to people is to really love what you do. And I love coming to work every day. I love managing money, market expectations, and really providing advice around the markets and the economy. It's what I love to do. Mm-hmm. I'm centered around some great financial advisors. I have a phenomenal partner who's amazing at what he does in terms of financial planning and relationships. And as good as he is, that allows me to be happy. That allows me to do what I love to do, is having a good partner. I waited a long time to have a good partner in financial services because that's not easy. That's a very difficult partnership to embark on in finances, is joint practices. Luckily for me, I found somebody that we had synergies because as an analyst, he saw what I would bring to the table. And from a marketing perspective, from financial planning, from the attention to details, the ability to manage a business, I saw that in my partner. It allowed me to stay in my avenue of money management. Mm-hmm. If I have to go out of that, that's where there's discomfort. That's not what makes me happy. So that to me was extremely important, John, is having a great partner to support me.
I love it. Got to have the right people around you for sure. Great parting words of wisdom. We've been here with Scott Shaw, CFA, CFP. He is the Chief Investment Officer of Bash Capital and a great friend of mine. Scott, great to have you on the show. I really appreciate it.
Thanks a lot, John.
You got it. And thank you all for tuning in today on today's episode of Tomorrow's Leader. As always, appreciate you sharing, subscribing, go down below, give 5-star review, and always appreciate your ideas for future content and future guests. For now, thank you for joining us. Again, Scott, thank you. And we look forward to seeing you next time. Take care, everybody.